Good morning. We will pay attention to VAT today when we receive a check after discount was allowed. It is very important to determine whether the amount given is the total debt or whether it is the amount received. If we look at this exercise, they say receive a check for 720 and we already allowed 10% discount. So that means the 720 that we received was only 90% of the total debt. And that 720 then equals 90%. If we want to know what is the discount, the 10%, we have to calculate the one that we want 10 over 90 to work out what is the discount. If we want to determine what is the total debt, then you will say 100 over the 90, and that will give me the 800 rand. When this goods were sold to the debtor, we paid over VAT on the total amount of 800 rand. Now all the money is not received. Therefore, it means that we didn't collect VAT on behalf of SARS. So for this amount of 80 rand that we calculated as discount, we must make a split and say how much of this money is discount for the business that will reduce their profit. So it will be 100 over 114. And this is the loss for the business. If you say that, then it means that's 14 over 114, and that will give me 9.82 rand. So it's very important to determine how you have to do the calculation for the discount. They can either give you the amount received or they can give you the total debt. If we include these figures in the ledger now, we determine that the total amount that's outstanding is 800 rand. The bank, we only received 720. The discount of 80 must be split between the discount allowed and the VAT output. So it means VAT output will be debited with 982, so we can claim back the 982 from SARS because we did not collect that money on behalf of SARS. The discount allowed will be debited with 70 rand 80 cents, and that is the amount that the business will lose. This is the discount that will be recorded in the income statement to reduce your profits. So if you look at the percentages, the discount allowed is 100% account. So all expenses and all income can never include VAT in your ledger. It must always be the 100% figure and not the 114% figure. The 100% figure is also the one that will go to the income statement to determine your profits and loss. Debtors control is 114% account because it includes the sales price plus the VAT, or the amount received plus the discount plus the VAT. So what did we learn today? What did we learn today? When goods are sold, the total VAT on the sales price is paid over to SARS, although the debtor still owes this VAT to the business. So the business actually pays the VAT on behalf of the debtors to SARS, and then they collect the money from the debtors later. When discount is allowed, the VAT is not collected on the discount allowed because we didn't collect it now. If we give discount, the people didn't pay the full amount, and therefore we can claim this discount back from SARS. The discount allowed account must always exclude VAT because the discount allowed is an expense, and all expenses will determine how much the profit or loss of the business will be. Read the information carefully to determine whether amount due or the amount received is given, because the calculation is done differently according to the amount received or the amount that is due.